Hello everyone. It's Thursday, April 16, 9:55, the timestamp as you can see. So here's a few things I want to talk about, okay? You could see there's like two line and whatnot, and then, you know. So based on the model that I have created over the years, okay? And I know we are in and out. We're a position trader. We could be in a trade for 2 weeks or a month or 2 months or to some extent 3 to 4 months. I just want to say that this I want to talk about some price action. I don't really talk much about short-term price action, but something's off here. Okay, something is not really adding up. Okay, so as you could see, I went 10 years. 10 years I zoomed in, and I can go monthly. No thanks. So yeah, as you can see, this is a monthly. So the point that I'm trying to make over here, this is not based on our model. As you saw the previous, there was a blue line. Okay, we don't invest at these levels. Can you argue with me saying that, hey, why would you want to time the market because it's investing? Well, I have a difference of opinions. Investing does have some things, as in, you don't want to invest at the top, okay? Because keep in mind, people that invested in what, 2007, right? Let's take a look at this. I'm gonna zoom in now, okay? So you see how people invested in 2007, and what happened? You had to wait 5 years, 7 years just to get that money back, okay? So that's so the timing. You want to argue with me? We can definitely, I can back you up with facts. Now I know these are prior convictions, but this is not a place. These are not levels where we invest. That's why in my previous videos, you go through my videos where when I was taking those short-term trades, I mentioned over and over again, look, I am a big believer this market's gonna fall, and this is just ridiculous. I want to show you another price action. I'm gonna go into shorter time frame, but give me 1 second. Yeah, I want to show you folks some real time action, and I do have a S&p 500 target. Now my target is not gonna be like, hey, it is spot on. I could be off by few hundred points or range. Actually, more like I'll give it a range, okay? By the end of next year, I'm looking at least at a minimum 4,500 or 4,000. Okay? I don't know why I said 45. And so this is it. This is where we're very close to the top. Very, very close to the top. The story doesn't get better than this. It really doesn't. It doesn't get better than this. And this is not an environment where you want to invest. People think, oh, market just keeps going up. It doesn't work like that. Yes, by looking at this chart, it does seem like market keeps on going up, but we have pretty much reached the top. And by the way, this is not your typical top. These are macro top. This is deadly. Okay. I just trying to warn people, save people. I would say stay cash. When we get to 4,500, you can start investing a little bit. I wouldn't even go, because I have lower targets. 4,500 is the minimum target by next year end. Okay. And mark this, April 16, 9:59 a.m. 2026 we're at right now. One last thing before I just finish off. I want to show you folks some other stuff. This is very bad. This is not even some, like, this is okay. So I want to talk about something really, really out of the blue here. Okay. uh and I'll let you be the judge. Okay. We're just, I'm purely unbiased. Okay. My job is to help you folks, not get into any I'm just looking for this. Give me 1 second, see if I can find. And I'm trying to find an actual SPX. Okay, we can go with the SPY. Okay. So let's go with this one. Okay. Ignore all this crap. This is just, you know, excuse my language. So let me zoom into this. We're at 3 months. Let me go 9 months. Okay. Now I want to show you folks something really cool. If I can get this to work. Obviously it doesn't work now. Before I wrap up the video. Okay. So we're gonna go 9 months, and I want to show you something. Okay, so let's take a percentage of this. You're all familiar with the, before we were at index. Now this is a SPY ETF. More or less, it's the same thing. It's just same thing as in same. This is the ETF version. Okay, that the previous one was the future. But something I want to talk about. We are at 6:30. This was end of March. Okay. So in give or take 2 weeks, and say 2 weeks, 2 weeks and a quarter, when an index moves 11.5% in 2 weeks, in, let's just say 5 days, or this is disaster. It's a disaster. This is basically a casino market. This is not a stock market. I call it a casino market. This is not a healthy market. People. I mean, I don't recommend for other people. I don't recommend for you to go and start short selling, because short selling is challenging. You have to have stops and everything. But this is just nasty. This is really nasty. And there's people retirement, with the 401k and for the long, so I just feel bad, really bad. This is gonna have a bad ending, where, I mean, for SPY, by next year we'll be anywhere between 400 to 450. We're at 700 now. Okay, that's the minimum, by the way. That's the minimum. Anyway, folks, as I said, I'm not here to scare you, and you already know everything that I'm basically, I took a lot of long positions, and those are basically short-term trades. Don't get the idea that, oh, we're gonna do home run with this. Home run meaning, like, I'm gonna hold it for a few months or something. But I just wanted to share this. This is just ridiculous. This is, the index doesn't move 12% in 11.5% in 2.5 weeks. Okay, those are the, like, fruitful signs that this is a casino market. These are the market you should stay away, and I would stay cash, and I would very, very be I would want to see SPY get to at least 450 before I start investing. Okay, look at the timestamp, 10:04 a.m. April 16th. All right, folks, that's all. This has been a long video.